Here are 7 news stories from the world of the crypto industry. First, news. Crypto companies are increasingly lobbying for changes in U.S. policy. Lobbying in the crypto industry has grown by nearly 1,400% since 2017, according to data from the social capital markets platform. Nearly 60% of the total lobbying expenditure over the past 7 years was made in the last 2 years. In 2023, crypto firms spent a record $40.42 million in efforts to influence U.S. policy. Apollo Global Management, a digital asset management company, invested over $7.56 million in promoting cryptocurrencies, hiring 104 lobbyists. The Managed Funds Association spent $4.11 million last year, while crypto exchange Coinbase allocated $2.86 million for these efforts. Notably, Coinbase lobbying expenses have increased by an impressive 3,475% since 2017. In early August 2024, the crypto company Fairshake announced plans to spend over $25 million on television ad campaigns supporting 18 crypto-friendly candidates from both parties for the House of Representatives. Donations will be made through a PAC group, which collects industry funds and invests them in the election campaigns of politicians favorable to the crypto industry. Among the largest PAC sponsors are Coinbase, Ripple, and Andreessen Horowitz. Second, news. Brazil's central bank may integrate AI into its Drex CBDC. The Central Bank of Brazil is exploring the possibility of integrating artificial intelligence into its digital currency Drex, signaling a significant shift towards innovation in the country's financial landscape. In its latest presentation, the Central Bank of Brazil outlined plans to incorporate AI methods and data monetization into its central bank digital currency, known as Drex. This move is part of a broader vision articulated by Roberto Campos Neto, president of the Central Bank of Brazil, who has mapped out the bank's innovation roadmap based on 4 key pillars: PIX, Drex, currency internationalization, and open finance. During his presentation, Campos Neto hinted at the potential addition of AI and data monetization as future upgrades, suggesting a flexible and evolving technological framework designed to adapt to new financial trends. To support these advancements, the central bank has already established a center of excellence in data science and artificial intelligence. This initiative aims to use AI to improve the institution's operational efficiency and productivity. By utilizing AI, the bank plans to enhance its infrastructure and methodologies, promising safer, more efficient, and responsive transactions for Drex users. This strategic focus on AI not only puts Brazil at the forefront of banking innovation but also aligns with global trends, as central banks increasingly explore the benefits of digital currencies combined with cutting-edge technologies. The integration of AI and data monetization strategies into Brazil's Drex CBDC could have far-reaching implications for the country's financial ecosystem. AI capabilities could enable more sophisticated data analysis, leading to better decision-making, improved risk management, and enhanced monetary policy. Additionally, data monetization could open new revenue streams and business models in the financial sector, providing banks and financial institutions with tools to capitalize on the vast amounts of data generated by their services. However, this forward-looking strategy is not without challenges. The central bank will need to overcome potential regulatory hurdles, privacy concerns, and technical complexities associated with AI integration. Ensuring that the AI implementation respects user privacy and complies with existing financial regulations will be crucial in maintaining public trust and fostering a positive perception of Drex. Moreover, industry stakeholders must be involved in creating a collaborative environment that encourages innovation while addressing any emerging technological and ethical issues. Third, news. Over the past 2 months, more than 600 Bitcoin ATMs have been shut down globally. In the 2 months of the third quarter of 2024, more than 600 cryptocurrency ATMs were shut down worldwide, with the majority of closures occurring in the United States. This was due to actions taken by law enforcement, as authorities often disable devices used for criminal activities. According to Coin ATM Radar, The global network lost 435 devices in July and another 182 installations in August. In the U.S., over 650 ATMs have been deactivated since the beginning of the year. Last month, the Chico Committee, California, reviewed regulations on cryptocurrency ATMs. Meanwhile, representatives of the Federal Trade Commission reported that since 2020, fraud and financial crimes involving ATMs have increased nearly tenfold. Regulatory researchers noted that in 2023, users lost over $110 million. Additionally, statistics indicate that citizens over 60 years old are at higher risk. Often, scams involve cases where criminals convince potential victims to transfer funds using Bitcoin ATMs. Currently, the US and Canada account for about 91% of the global network's devices. The top 10 operators manage more than 28,000 ATMs, with Bitcoin Depot leading the way, operating 8,512 ATMs. At the end of last month, Germany's Federal Financial Supervisory Authority seized 13 devices in 35 locations. Officials have warned users that using ATMs involves a high risk of financial loss. For example, in Singapore, such devices have been completely banned by the monetary authority. Fourth news. The BTC exchange rate may continue to decline. According to data from CryptoQuant researcher Yancey_Dent, Bitcoin's price is under pressure once again. The expert expects a bearish reversal, which is causing concern among investors. The analysis of Momentum Trio, which includes three key indicators MVRV, active address counts, and moving averages, points to a possible decline in quotes. MVRV helps gauge whether the market is overvalued, while active addresses reflect demand for the BTC network. Recent data reveals a death cross, the crossing of long-term and short-term moving averages, often signaling a bearish reversal. A similar signal was observed at the end of the 2021 cycle, leading to significant market losses. This signal raises questions about Bitcoin's ability to stage another price rally under current unfavorable conditions. Overall investor sentiment, as measured by network activity, has also decreased, evidenced by the low level of new participants. Negative signals are further reinforced by other indicators, such as reduced institutional interest in digital assets and increased volatility. These factors could hinder the market's swift recovery. Additionally, the lack of significant trading volume and low liquidity present further obstacles to price growth. Analysts note that the current situation is unlikely to change without major macroeconomic shifts or the emergence of new positive triggers. Thus, despite possible short-term spikes, the current market state indicates a high risk of further BTC price declines. Investors should remain vigilant and carefully evaluate all factors before making investment decisions. Fifth news. The number of TRX holders has surpassed 111.11 million. The Tron ecosystem continues to show steady growth. According to recent data, the number of unique TRX holders reached over 111.11 million by August 26, 2024, highlighting increasing user interest and adoption of the platform. This figure indicates that Tron is expanding its user base, solidifying its position as one of the leading blockchain platforms in the crypto space. In addition to TRX, tokens such as BTT, JST, and Sun also show positive trends in holder growth. This steady increase reflects a strong level of community engagement and user support, further strengthening the Tron ecosystem and its influence in the decentralized finance market. Analysts suggest that this growth may be driven by Tron's active efforts to develop its infrastructure and expand partnerships. Recently, developers have been collaborating with various decentralized applications and blockchain projects, promoting the ecosystem's integration and adoption among developers and users. Moreover, Tron's decentralized nature plays a crucial role in increasing the number of holders, offering users more opportunities to participate in ecosystem governance. The rising popularity of DeFi on Tron, as well as the introduction of staking mechanisms and voting for super representatives, likely contribute to building user trust and attracting new participants. It is also worth noting that the steady growth in token holders within the Tron ecosystem is a positive indicator for investors. It signals a high level of activity and interest in the platform, which in turn may positively impact price, liquidity, and the development of new projects on the network. 6. News. DeFi leads in monthly unique wallets for August. According to a DappRadar report, DeFi and social applications saw a significant increase in daily unique active wallets in August, with the dApp industry averaging 17 million free connections, up 9% from the previous month. Decentralized exchanges Radium and Uniswap v2 recorded 18.8 million and 4.8 million unique active wallets per month in August, respectively, placing them second and fourth in terms of blockchain app activity during the period. Notably, Radium's activity grew by 107% over the month, while Uniswap v2's activity fell by 9%, highlighting a trend of increasing user activity on Solana. Despite having two of the 5 most active platforms last month and nearly a 10% monthly increase in unique users, DeFi applications collectively gathered an average of 2 million DUAW and accounted for only 12% of all activity observed last month. Meanwhile, the social sector accounted for 23% of industry activity with 3.9 million DUAW in August, second only to the 24% dominance of gaming applications. The social platform's CARV on the OpBNB network was the most popular app last month, with 28 million unique active wallets, a 2,331% monthly growth. Additionally, the Web3 shopping app KAI Ching had 16.7 million unique active users per month, making it the second most used app in August. This is a significant figure, as the app, deployed on Near Protocol, achieved this despite losing 4% of its user base. Hot Game, also deployed on Near Infrastructure, completed the top 5 most used blockchain applications in August with 4.1 million unique active wallets per month. Although DeFi app activity increased monthly, the total locked value in the sector and app revenue did not rise concurrently. In August, the number of DeFi dApps dropped by 15% to $124 billion, as the broader cryptocurrency market experienced a downturn. In terms of revenue, DeFi applications had one of the worst months of the year, registering $65.4 million, according to Token Terminal. This was a 13% decline compared to July's revenue of about $75 million, contrasting with the user activity growth observed last month. 7th News. Mastercard launches a debit crypto card in Europe. Payment company Mastercard, in collaboration with Mercurio, has launched a new debit card called the Mastercard Crypto Euro. With it, users will be able to spend their cryptocurrencies at more than 100 million European merchants, bringing such transactions into the realm of everyday use. Mastercard and Mercurio aim to make cryptocurrency easy to use. Their partnership allows users to manage their digital assets without intermediaries. The new debit card is geared towards self-custody wallets, where users retain their private keys. This makes transactions more secure and aligns with the fundamental principles of cryptocurrency. Those wishing to obtain the Mastercard will need to pay €1.60, with a monthly maintenance fee of €1. Mercurio, in turn, charges a 0.95% fee for using the card. The launch of Mastercard's new crypto card for EU residents, along with the integration of cryptocurrencies into a globally recognized payment service, implies partnerships with numerous crypto companies. Thanks to our collaboration with Mercurio, we are breaking down the traditional barriers between blockchain and regular payments, providing consumers who want to spend their digital assets with a simple, reliable, and secure way to do so wherever Mastercard is accepted, said Christian Rao from Mastercard.